All right. Happy midday, everyone. This is Max over at Trades and Gains, powered by Investor Central Club, or as Intel shareholders are currently calling it, why did I wake up? I should have just slept in. I mean, after all, it is Friday. Because if you blinked this morning, Intel just wiped out 6 months of optimism before breakfast even started. So let's go ahead and start with Intel. Intel stock didn't just fall today. It fell down, well, an elevator shaft. Let's go ahead and look at the chart here, by the way. So this is what Intel decided to do. Beautiful, right, mate? That's just beautiful. That thing fell off of a cliff, all right? It's down 15% because the company came out and basically said, yeah, well, the demand is there. We just can't actually make the chips, which is a bold strategy for, well, a chip company. Intel reported Q4 was fine. AI demand, well, it's growing double digits. And the turnaround narrative, well, it's still alive, kinda. It's like when you hit a deer with your car and break its leg. It's gonna live. We just don't know how long until like a wolf comes and eats it, right? But then enter in Q1 guidance. And Wall Street basically looked at that and said, oh, so this is still a hope trade. Galaxy gas is starting to wear off, guys. Let's start exiting these positions, huh? Revenue guidance, well, it basically missed. EPS guidance is 0. Supply constraints, well, those are expected through Q1. Margins, they're pressured by expensive new process nodes. The translation of all this, the future looks great, and the present looks like a factory bottleneck. Oh, wow. It's like I've been telling you guys about that issue for almost a year now. Shocker, shocker. And by the way, this is why they got absolutely smoked. And here's the irony of it all. Intel is losing money because demand is too strong and they can't keep up. That's not what we like to call a collapse. That's just a simple timing problem. But markets don't price patience. Meanwhile, AMD is eating up that share that they did have. ARM keeps creeping into everything, and Nvidia just keeps, well, printing money. Intel's story, don't worry, it hasn't died yet. It just got delayed. And Wall Street hates delays more than bad news. And this is where the Intel sell-off connects to the bigger picture. AI isn't dying, it's evolving. Markets are no longer paying for AI exposure, AI potential, or AI vibes. They're paying for execution, margins, actual shipping products. That's why Nvidia keeps ripping. That's why AMD keeps catching those bids. And that's why Intel gets punished for almost just being there and existing. Now, the AI trade didn't pop. It just grew teeth at this point. It means it's maturing. Now let's pivot from chips we can't get to robots we don't have yet. Okay? Elon Musk basically showed up at Davos and did what Elon does best. He promised the future, he smiled confidently throughout it, and he set a deadline he may or may not meet. According to Musk, Optimus humanoid robots could hit the public by late 2026. Robotaxis will be widespread by the end of this year, and there will eventually be more robots than people, which is either A, a bold vision of abundance, B, a sci-fi movie we didn't ask for, insert Westworld, or C, both. Tesla needs, and I mean needs, this narrative right now. Why? Well, because Chinese EVs are eating the global auto market alive. Margins are tighter, growth is slowing, and Tesla's valuation still screams, we are not just a car company. Musk isn't selling earnings, he's selling Act 2 to Tesla. Robots, autonomy, and most importantly, AI services. Whether Wall Street buys it depends on one thing. Can Tesla turn hype into cash flow? Kind of like, could Boeing turn their backlog into cash flow? Because eventually, even Elon has to ship something. Now, next up, we're going to talk about everybody's favorite dancing app, TikTok. 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 After years of congressional hearings, national security panic, and this app is definitely getting banned, probably, TikTok is officially here to stay. Deal done, US entity created, Oracle, Silver Lake, and MGX on board, American board, American oversight. And ByteDance, well, they still own a chunk. They still license the algorithm, which means the government basically said, fine, you can stay, just don't spy loudly. This is a huge win for creators, advertisers, and even small businesses. And it's also a reminder that America talks tough, but it hates giving up dopamine. Markets love certainty. TikTok got that certainty. Meta, Google, and Snap just got real competition again. Now let's go ahead and talk about the American consumer. The University of Michigan sentiment. It's slightly better than December. It was still 20% worse than last year. Consumers, they're not freaking out. They are not optimistic. They're just tired at this point. This is what we like to call a grind economy. Yes, a grind economy. And no, I'm not talking about Pretty Ricky grind on me. I'm talking about you kind of got to grind yourself down to make rent each month. Prices are still high, jobs feel less secure, and tariff noise is lurking in the background. People aren't connecting geopolitics to their wallets yet, but if tariffs heat up again, that mood will flip fast. Consumers, they don't need a crash to pull back. They just need, well, uncertainty. So here's the through line on today's show. Intel, well, it shows the market now demands execution. Musk, it shows the market still buys vision. TikTok shows geopolitics bend to economic reality, and consumers show resilience, but not necessarily enthusiasm. This is not a euphoric market. This is a selective market. Money is rotating, narratives are being tested, and hype alone doesn't clear anymore. The market isn't scared, it's discerning. Now, before I let you go and before we give closing thoughts, let's just look at Flow Scanner from Investor Central Club. Use the code SUPERMAX to get 20% off your first month. Probably the best options flow software that I've used, just in terms of it being actionable and easy to read. So when we're looking at this, we're looking at LRCK or LRCX is leading Flow, 40 million inputs. That looks like it came in one. NVIDIA, QQQ, Meta, and SPY are all leading right now. SLV's in there, Amazon, Microsoft, Tesla. Again, today was a buy the dip opportunity on the Mag 7 for the most part. And if you want to get this kind of data in real time, again, go to investorcentralclub.com. Use that code SUPERMAX20 for 20% off. So, closing thoughts. If you're wondering, though, why stocks feel jumpy lately, this is why. We're in a market that loves clarity, hates surprises, and punishes almost their stories. Intel, it isn't broken, Tesla isn't crazy, and TikTok isn't dead. Consumers aren't collapsing either, but nobody's getting a free pass anymore. And that's the real midday update today. Anyways, this is Max Pitts with Trades and Gains powered by Investor Central Club. Make sure you like, comment, and subscribe if this video helped you out in any way, and I'll make sure to see you guys in the next video. Have a great rest of your trading day. Come join us on Free Wi-Fi Radio and over on Twitch. Free Wi-Fi Radio with that O being a 0. See you guys in the next video. Have a great Friday.